The Nigerian Exchange All-Share Index and market capitalization appreciated by 1.22% last week to close at 44,492.73 basis points and 24.234 trillion, respectively. A total turnover of 694.376 million shares worth 8.667 billion in 15,418 deals were traded last week by investors on the floor of the exchange, in contrast to a total of 1.1 billion shares valued at 11.7 billion that exchange hands the week before in 15,697 deals. Today we have two of our guests. We have Mr. Ambrose physically, Mr. Ambrose Omodion, CRO Invest Data Consulting, and Mr. Christian Anyalasi Isaac, who joins us virtually. Three of us will be analyzing this together today. So I'll start with Mr. Ambrose. Last week, we saw that the market was bullish. Can we look at some of the factors that was responsible for this?
Actually, I would say just low price attraction and also what we call speculation in the market. People seeing that prices are pulled back, and now we have a shorter days to end of this financial year for those that have December, and also the end of the year seasonality around the corner. People already take advantage of those prices. And don't forget that the investors are looking to see the outcome of MPC meeting holding today and tomorrow, and that will add more fuel if we see either a minimum kind of adjustment for either 50 basic points or flat. That will also add more kind of fuel to what we saw the previous week. But I believe that prices of equity are low, and companies, third quarter result beat imagination of many investors and analysts. That is the kind of the force now that is supporting these prices. Market has come to a level that every analyst have forecasted the market will likely to break down the 42,000 mark, but it refused to break out 43. That there is a force or a kind of a strong support that is holding that market, and that is what earnings. Because I'll tell you, if you look at inflation figure, you look at increasing economic headwinds, people look at that in all these opportunities in this market. Where can we take it? And they are seeing that there are some sectors that even what is happening in the economy is impacting positively their numbers. For that, that's as an investor, you don't just look one way your investment. Then people are now looking at let's reposition our portfolio to those sectors and those individual stocks that have the potential to produce a good dividend. At the end of the year, we're having a 2-digit dividend yield, and which also many people that are going to fixed income are also looking at 2 dividend return. For me, I believe that equity market post kind of brighter position for those to see that if you really want to hedge against inflation, they are seeing that now this is end of the year. Seasonality will pay most of the companies on the exchange because consumption has increased as we go through the festive period. Others that we are seeing that. For me, I believe that between now and January, we'll see this oscillation, but we'll see a positive market.
Yeah, well, let's hear from Mr. Christian. Mr. Christian, do you agree with what Mr. Amodion has explained here?
Yeah, he has made some very strong points there. The growth we saw in the market was as a result of speculative activities and because of low prices of most of those equities. We've said before that most of the shares in the market are seriously undervalued as a result of limited liquidity to push up the market in consonance with the level of returns that we see from those stocks that or those equities that has very strong fundamentals. So what he's saying is very correct. And if you look at today and tomorrow, the MPC meeting is supposed to start today and through tomorrow. That also means that there is some air of uncertainty because we're expecting that maybe the monetary policy rate will be raised. It could remain flat, like he said, or it could be adjusted by maybe about 25 to 50 basis points. So these are some of the things we are looking at. I think the market has shown reasonable resilience, considering systemic liquidity and capital flight that has been occasioned by various factors. But we are seeing a mature market, and going forward, a market that will do well if some other economic fundamentals are gotten right.
Well, on that note, let's look at this week because of our time. Let's look at what should we be looking at this week in terms of because we saw inflation data last week. It didn't have much effect as many people would have predicted. I think the market only went down the day after the inflation was dropped. The next day it went up, and the day before that, or the day after that, it went up. So looking at the MPC in focus, what should we be looking at this week? That's for you, Mr. Christian.
Hello. Okay. Like we said, for today and tomorrow, there will be some element of uncertainty surrounding the market, because investors want to know whether the monetary policy rate will be raised, and that will have implications for lending rate in the system, and people will want to also know whether they will have to go for equities or whether they will have to patronize the debt market. So for today and tomorrow, we expect to see a cautious buy, mild market, and that is the expectation for now.
Now to you, Mr. Almodion. What's your take for this week?
Actually, I just said it all. I believe that they will see a mixed market this week, and one reason is that investors are still sitting on the fence just because of this MPC. You can see that last week the volume traded was not much compared to the what expected. Market was up by 1.2, but you can see that the volume was also in a decline. It tells you that only few stocks that people are taking position, because I tell you many market players, including the international investors, are holding cash to see the outcome of this MPC. They've seen the figure that mattered from Bureau of Statistics, if the consumer price index. Yes, they're still keeping on northward movement, but people are trying to balance their portfolio. Why? If you want to hedge against inflation, you better look equity. But like I just said, if there's any adjustment in rate, especially above 50 to rather 100 basic point or 150 gain, we might see more set down in the equity market. Why I say so is that automatically the yield will go up, because we're high in there. But on that, it has a way of also affecting the economy, because once you are there, cost of funds also go up. That means activities also slow down, and that is why CBN or money to marry between creating a job and at the same time managing what prices, because they are the two duty of MPC anywhere: price stability and to create job for the people. But if you're increasing rates higher again, and those people that are going to employ people to lay them off, that means you have also creating another way that unemployment to start going up. You need to balance, but also because they are doing another thing entirely because of this another redesign. It's another thing that they want to control money outside the bank cover. For me, it is time for CBN or the money to hold on to see the impact of the money redesign they are doing between now and January 31st, which they give us to exchange the new note and the old note. This is where they should hold on, so that at the end of the day, it will now inform where we should move on. Because I believe that this step they are taking is another way of controlling inflation in a good way, but that means they should not rely more on those adjusting rate alone, because already this is the highest rate we have seen in Nigeria since 15 point something. It's the highest. Yes. If you want to move to 17 again, automatically you are closing doors to many business and many industry.
Yes. On that note, let's have Mr. Christian's final thought. Mr. Christian, hello? Yes, let's have your final thought.
Okay, my colleague with you there, the doctor, have said it all. The MPC, we think that they would have examined the economy, examined the impact of the hawkish stance or the red tweet that we have seen from the beginning of the year, which has gone to about 400 basis points, and consider some other options for managing inflation. Like he rightly pointed out, we expect that with the currency redesign, there's going to be some level of restrictions. There's in liquidity, as people try to get the new notes to be able to do their transactions and all of that. So there is a great sense in adopting a very cautious approach by the Monetary Policy Committee with respect to managing inflation by not raising the rates too high, because of course at 15.5% already they have very limited space for any adjustment or further adjustment of the rates of the monetary policy rate. So they should be looking at some other windows to be able to manage macroeconomic policies.
Thank you very much.
I agree with him certainly that the currency redesign on its own is if it is passionately implemented, like the banking recapitalization we had during the days of Soludo in 2006. If it is managed with that level of passion and caution, I think it is a good policy initiative that will help to rein in inflation than just concentrating on on the increase in monetary policy rate.
Well, Mr. Ambrose, so your own opinion, yes, I see you're in agreement with Mr. Christian. So let's
just on my own is for investor not to panic, because yes, the outcome of MPC will have a way of influencing the market positively or negatively. That is why most traders today or investors are sitting on the fence as a cautious trading to see what will come out of it. But at the end of the day, if inflation, if interest rate is left unchanged, that will be good for the market. So the market to catch up what we saw last week, that trend will continue, and that will be good for the market, because any season has given us insight of what we should expect. And also we're entering what we call a Santa Claus rally, end of the year in December. For me, let's investors keep calm and see the outcome. But also, like he just said, I said earlier, it's not the time for MPC meeting to just or committee to start raising rate, because you're already trying to manage inflation with your Naira design. Then leave rate to see. Let's see how it will stabilize the economy. If you're hiking rate again, also you are doing this, I don't know what you want to achieve. Let's see the impact of what you want to do first before you can also go. You have increased rate for almost 6 months. Yes. 6 months now. Let's see what the Naira design will do on the economy.
All right. Thank you very much, Mr. Ambrose Omodion, CRO Invest Data Consulting. Thank you very much.
Thanks for
also
having
say
me.
Thank you to Mr. Christian Ayala Isaac. Thank you very much for your time on the show. We'll move on now. The National Bureau of Statistics reported last week that 133 million Nigerians are multidimensionally impoverished, representing 63% of the population. We shall be looking into the impact of this when we come back.